Scan to unlock Sovi and ace your tests.
Japan's interest rates are climbing fast. We must find the impact on the foreign exchange market. Let's solve this economics puzzle together now.
When Japan's real interest rates increase while India's stay constant, Japanese financial assets become much more attractive to international investors. This shift creates a massive incentive for global capital to move. To buy those high-yield Japanese assets, Indian investors must sell their rupees and buy yen. This surge in demand for the yen shifts the demand curve to the right immediately.
As demand for the Japanese yen increased, its value rose against the rupee. The yen appreciates, making option D our final answer. Well done! Scan the code. You can learn better with Sovi. Avoid a rush by watching signs. Trust given data and check steps.